What up, guys? So I'm a retired hedge fund quant, and I want to let you guys in on some of the Wall Street insider secrets, crafty tactics used by the elite to make some outsized returns like Nancy Pelosi. So in this video, we're going to go over 4 separate asset classes and how to outperform in all of them. Precious metals like gold, real estate, stocks, and crypto. All right, so precious metals like gold. The first thing I would say is you absolutely want to buy physical gold, like gold coins or gold bars if you're a baller. But you do not want to be buying GLD, the gold ETF, and I'll get into why. On Wall Street, there's a secret black market of people who all own some kind of precious metals, gold, silver, copper. And so you can always find the liquidity to trade physical gold with traders in the pits or just by asking around. And there's major benefits to this. The first major benefit is that with physical gold, you have to self-report all of your gains and losses every year when you file your taxes. And if you own GLD, the ETF, that gets auto-reported to the IRS by your brokerage firm. So the benefit of having to self-report it is that when you make a capital gain and you sell your gold for a profit, you can forget to report it to the IRS. And so you can avoid having to pay capital gains tax on that. But if you lose money on your gold holdings, then you can report it to the IRS and get a tax credit for it, because that's how that works. Basically, when you lose money on any investment, you can write it off as a tax deduction. And so let's say we're talking 30% tax bracket. Whenever you lose money, you can get 30% of your losses back from the government when you file your taxes. But then when you make money, you can just forget to pay the 30% capital gains tax to the government. And so that adds up over time, right? When you do that with all your trades. And so that's one of the main benefits to owning physical gold and to having a network of people that you can trade with on Wall Street. But the other benefit is that with that liquidity on Wall Street, you can always find people to trade with right at the mid-market price. So let's say you're just trading physical metals with one of the other pit traders. At exchanges, they'll have all the prices just on the wall, so you can just meet up with your friend and just say, hey, so I'm gonna sell you this gold, all right? Let's just agree to trade it right where the price is in the next 5 seconds. 3, 2, 1, all right, that's the price. And then you just say, all right, deal's a deal, and then you just shake hands on it. And then they'll either pay you in cash or they'll pay you in crypto or something. And it's just completely off the record, right? That's the way to do it. And if you try to sell gold, even physical gold, elsewhere, like you go to a physical retailer or some kind of gold exchange, they're gonna scalp you hard, bro. It's like a currency exchange at an airport. You're gonna have to give away like 5 to 10% maybe. That's a huge amount of money if we're talking large sums of money that you're buying and selling in gold, right? All right, let's talk real estate. So the first major tip I would give people is if you're gonna buy a rental property, claim that it's gonna be owner occupied with the bank when you're negotiating the mortgage interest rate. You can get a way better interest rate when they think it's going to be owner occupied, because there's way less risk with an owner occupied property as compared to an investment property where it might be trashed by tenants or your Airbnb guests might trash it. And so once you get the mortgage rate locked in at the owner occupied rate and everything's settled, then you can convert it to a rental property and you can keep the lower interest rate. So that's the first tip. And the second tip is to maximize every tax deduction possible. The list is extensive with rental properties. A lot of people don't know this, but you can literally take vacations near your rental property and write off the flight, restaurants, hotels, even car mileage you can write off. And so you can get 30% off your vacation as long as your vacation's somewhere close to your rental property. The reason why is because you can just tell the IRS that you went there to do business and do maintenance on your rental property. And so if you buy a rental property at a common vacation destination like Hawaii, then you pretty much your trips to Hawaii are now 30% off. With the actual rental property itself, what I would do is I would just turn it into a flop house. So I would just have tenants everywhere. I would have people pitch tents in the backyard with a porta potty. I would put partitions, like walls with curtains all over every room, and let people just rent out these little closet-like spaces. And by doing this, you can make way more money. And the regulators don't really pay attention to this kind of stuff. I even have a friend who made millions of dollars and is retired now from just doing stuff like this. He basically He was a Chinese guy, and he would advertise in the Chinese newspaper in Chinatown, and he would find these Chinese guys who would just live in his house and rent out these small little closet-like spaces. It was like a capsule hotel, and they would just pay him in cash or crypto, so he didn't even have to report his rental income. He just did that with one house, another house, and he had multiple houses, and he was just making tons of money doing this. And eventually someone snitched on him, but all he did was just pay some small fine and knock down the walls, and then a month later he put the walls back up again. And he would just keep doing this because the amount of the fines wouldn't even be close to the amount of money he's making every month with his rental properties. And so, this is a really great way to make a lot of money, especially if you're not necessarily a book smart person or a person who has, really high academic pedigree. You can still make tons of money doing something like this. Regarding stocks, I think that most people know the conventional wisdom of maxing out a 401k, opening a Roth IRA, things like that, target date funds. But I'll go into the backdoor Roth IRA. So most Wall Street people, they make more than the maximum salary that is allowed for contributing to a Roth IRA. And so what they do is a backdoor Roth IRA, which you can learn the details about just doing some Google search. But the short of it is that you open up a traditional IRA and then a Roth conversion. So you just convert the traditional IRA to a Roth IRA. And you just do this once a year. It takes like 5 minutes. And it's a well-known loophole. It's completely legal. And it lets you max out your Roth IRA as well, even though you make more than the maximum salary limitation. And something I find even more savvy people don't know about is the mega backdoor Roth IRA. It allows you to get maybe an extra $50,000 in Roth every year. You just go through your 401k administrator and you just ask them about the mega backdoor Roth IRA. And at a high level, what it is you contribute after-tax money into your 401k, and then you do an in-plan conversion to convert that into a Roth 401k. And so you might get up to $50,000 a year in Roth funding. So every year your returns on that $50,000 can avoid taxes, which is huge over a lifetime, over your entire career. It'll save you hundreds of thousands of dollars. So don't forget to look into that, mega backdoor Roth IRA. And the last point is about crypto. For U.S. citizen, unfortunately, the U.S. government requires that you pay them in taxes no matter where you are in the world. So the only real crypto tax haven is Puerto Rico right now. But the rules on this are always changing, so keep an eye on it if you're a person with huge crypto holdings. But for other people who are not U.S. citizen, there are a lot of countries that want you to come there and spend your crypto profits in their countries. They let you avoid paying capital gains on your crypto winnings. So countries like Germany, Singapore, they have no capital gains tax on crypto. So if you made a lot of money on crypto, I would just move to one of those countries and sell there and enjoy life there for a little bit. They usually have some requirement where you have to live there for at least 1 year or something like that. And then once you sell everything, then you can go back to your old country. All right, well, I hope you guys learned something. And you'll probably notice that a lot of these crafty tactics have to do with saving on taxes. But I want to remind you guys that a guaranteed savings is worth a lot more than a hypothetical boost in returns, right? Because any hypothetical boost in returns is going to come with a boost in risk as well. And so, there's a saying, defense wins championships. While it's less sexy, finding ways to defend your capital is worth a lot more than looking for hypothetical ways to play offense. So let me know if you disagree in the comments. Take care.